Okay, so this is our reference point. So wherever I drag this, it should have matching highs and matching lows, okay? Now watch what happens when I drag to the right, going forward in time. Okay, right there, we have this high higher than that high. Slightly higher than that high. See that? ES is not showing the strength to the upside that NASDAQ is here. So keep marching forward, going forward, and right there, we can see that this high and this high, NASDAQ is lower, but ES is higher. Doesn't mean anything yet. Watch what happens. We have now this short-term high that's been taken out by this high. This high is this high here for NQ. Okay, so NASDAQ's high is here on the 1 minute chart, and ES's 1 minute chart high is here. Over here, look what we have. We have relative equal highs. See that? But we have a stronger, higher punch through by NQ. So NASDAQ was higher here. After, here's the key point, a short-term high was taken, and then a fair value gap was left. Okay, after digging into this 1 minute buy side and balance sell side inefficiency or gap, okay, and we expect the market to turn here. So we have relative strength analysis on our side that NQ or NASDAQ futures was the better buy. And again, why? The short-term high here is much more prominent of a break here than it is here. These are relatively flat. This, I'm looking for the relative strength leader, one that wants to break out higher, faster, stronger, okay? And while they both pretty much moved in sympathy with one another, the more sharper technical picture was seen in the NASDAQ. Notice that there is a small little gap here, very small. Let me zoom in here without messing up any of the relationship between the two. There's a small little gap right there, but look how sloppy it is. See how it completely goes down below it? We don't have that here on NASDAQ. Okay, we don't see that. Why didn't we see it? Because it's stronger on NASDAQ. NASDAQ had much more relative strength comparatively to that of the ES, E-mini S&P. So I'm going to trust this one because visually I can see that fair value gap. It's much more prominent here versus the very lethargic looking fair value gap down here. This one's much more energetic. It's much more obvious. And it is also with a market that's moving more explosive to the upside. Okay, so I want to be in this market buying this fair value gap right there and trusting that it will not completely close in. Why? Because we want this to act as what? A breakaway gap.